For our discussion today, we're privileged to welcome 4 faculty and practitioner experts. Andrea Eisfeldt is a professor of finance at Anderson and the Laurence and Lori Fink Endowed Chair in Finance. She is an award-winning researcher whose work has focused on macroeconomics and finance, including research on market liquidity, the role of intangibles in asset pricing, bank valuation, and over-the-counter markets. She's also held prominent roles consulting in the asset management industry. Gregor Schubert is a professor of finance at Anderson whose research focuses on housing finance, urban economics, real estate, labor economics, and corporate finance. Emad Hasan, an Anderson alum from the class of 2013, is the CEO of Novex AI. This is an operating advisory service focused on using AI to leverage data into competitive advantage for firms backed with private equity and venture capital. And David Hefter is a director and AI champion at BlackRock, the world's largest asset manager with nearly 10 trillion now in assets under management. He leads AI for private markets investing. Thank you all for joining us. So I asked ChatGPT to write a poem to motivate our discussion on AI and finance, and within a few seconds, it returned this. In the realm where numbers dance and play, where finance weaves its intricate array, AI emerges, a beacon bright, guiding ships through the darkest night. In digital gardens, money trees grow, rooted in bites in silicon glow. AI, the gardener, with meticulous care, prunes and nurtures with precision rare. Yet, in this dance of digits and code, where AI walks the path it showed, remember the human heart and mind. For in their complexity, we truly find the essence of value, the measure of wealth, not just in ledgers, but in health. Finance and AI, a powerful pair, but let's tread with wisdom and a mindful air. And so with that, let's dive in. Let's start with the landscape. I'm curious about each of your perspectives on this. So how do you define artificial intelligence? Might even be getting overloaded as a term. What distinguishes it from other forms of computing technology, and why has it become top of mind for businesses? Andrea, if you could start.
Oh, sure. Yeah, I thought you were going to go to Gregor, who is my co-author on really exciting work on generative AI and firm values, because being younger, he's going to speak better about these things. So I will take a shot. The way we're thinking about it, because AI has been around for a long time. It's kind of like when people started talking about big data, and Lori, I think you can appreciate this. Any of us who've worked with census data thought like big data is not new, and panel data econometrics is not new, and essentially machine learning and a lot of earlier iterations of AI, were not new. They were evolutions of existing technologies. But I think we did have this big shock to what we could do when we were able to increase the size of those models to really improve the accuracy and the human-like interplay. Like the poem was pretty sweet. I mean, that was really nice. And also to facilitate the input-output. So it was like when I used to code, I loved coding. I did not like downloading data or outputting data. It was like the input-output was always difficult. And what generative AI does is it makes that part human. And that is kind of I think, going to allow more engine drivers of this exciting technology.
Excellent. Gregor.
I would say that I think we've had some forms of AI for a while already in the forms of just systems that can ingest a lot of data and do tasks or provide predictions as a result of that. I think the really exciting thing that happened recently, which is why we're talking about this now, is this combination of high computing speed and cloud computing and transformers as a technology that have sort of combined to enable us to have large language models that are basically out of the box useful for business cases and can sort of do tasks that come close or exceed human ability to generate text, do administrative tasks, and so on. And I think it's that leap in some ways of usability that has really brought AI to the forefront of everyone's mind. And that dam was probably broken by ChatGPT and sort of the instant usability gain that people got from being able to sort of interact with the chat box and see output appear on their screen.
Emad, what do you think?
I think I echo a lot of the similar sentiments, and in fact, I feel like the term AI had like already been overloaded. Like prior to ChatGPT, it wasn't that we weren't using that term; it was being used for machine learning or deep learning networks in some ways, and now it kind of gets used in many different buckets. And the four buckets that I tend to see are your data ingestion transparency based on data. So if any of you use Looker or any other business analytics tools, there's that component, which really doesn't have any AI in it. Like it doesn't even have statistics. It's basically representing data. Then you have your statistics-based models, and these might be your typical forecasting models. So if you think about revenue forecasting, we've been doing that for like many, many years. And there, even though there's a lot of stats in it, there's not really a lot of AI. Then came machine learning models that probably became a lot more popular about 15 to 10 years ago. And we've started to use that in things like risk detection in the financial world. But in 2017, the paper called Attention is All You Need, the Transformers paper that came about, brought about this whole the LLM models. And now the last three buckets that I talked about all kind of make up this AI ecosystem, because even when you think about the image generation, like those aren't large language models per se, that's large language models plus diffusion models. So now a lot of the combination of different models is happening. So now all of that is kind of getting lumped into this AI bucket. But I'm curious to hear from Dave's point of view as well.
Yeah, certainly. And thanks, Laurie, for having me here. In my own view, I'd say that machine learning is like the main differentiator here when I think of AI across or compared to all other technologies. Machine learning is the one thing that adds some intellectual value on top of what the computer programmer has built. And previous to machine learning, computers would help make things faster than what a human can do. But in terms of the sophistication, they would only equal what the computer programmer can do. And it's really machine learning that elevated the product from to something that's more sophisticated than what the programmer can do. So in this wave of generative AI, obviously machine learning is there. And I think it's just a super exciting topic that we're on today, because it's an area that people are having fun with as a technology, something new, and it's very, it's got some huge potential in terms of the productivity gains. So that combination is really unique. So I'm just excited for this conversation today.
Hey, excellent. And we're excited to hear more about what some of those advances and applications can be. And Emad, I'm curious, based on your work across a lot of different industries, as you work with boards and management teams, what are some of the most impactful current applications of AI that you're seeing across different industries? What are some of the trends?
So the two buckets of trends that I'm seeing are productivity gains that companies can leverage, and then what they can offer to customers. So if you think about the productivity gains, these tend to happen in the buckets of sales enablement. So a really simple use case is I'm working with a payments company right now that has tens of thousands of customers that are enterprise customers, and they have payments data as well. So what we can now do is we are monitoring the payments data for any kind of product adoption that happens, and automatically write case studies that whenever we see any lift in interesting product adoption related lift in performance for any of the customers, and automatically draft up case studies that then go for approval. So in the past, this would be like a marketing team's job. It would take them, quite a bit of work knocking on the doors of account managers as well as your customers. And now it's kind of a much more streamlined job. Similarly, the generated content for marketing, lots of easy use cases there. Customer service, code generation, automated code generation with copilots of the world. And then you also see on the product side what you're building for your customers, customer chatbots, knowledge retrieval systems. These are the typical use cases, but I will put a big asterisk in it because many of the customer-facing products tend to be in pilot modes versus like full-fledged deployment. So I think there's still this like barrier that we have to cross over, where a lot of these large language model based products are just like out there in the wild doing things on their own. A few companies have obviously launched it, especially like tech companies, but those are still a little bit early days.
Mm-hmm. So you mentioned customer chat bots, and last week Klarna, a fintech company in the buy now, pay later space, famously announced that its AI assistant can do the job of 700 workers. So that's obviously good news for profit maximization, worrisome for the labor force. Gregor and Andrea, both of you, if you could tell us, how do you see AI affecting employment trends in both the short and long term across different industries? And we tend to focus on maybe job cuts, but is there any way in which AI can lead to the creation of new jobs, even as it displaces others?
Gregor, you go ahead first.
Yeah, so I think what we find in our research is that there's definitely the potential for negative effects in the short run, where we find declines in job postings and in wages, particularly for occupations where generative AI is likely to have a bigger impact on the productivity of tasks that people normally do in those occupations. But I think it's not all bad. So one thing we find is that this varies a lot depending on what kinds of tasks are impacted by generative AI. So if generative AI, for instance, is really good at automating scheduling, reviewing documents, and helping you respond to customer inquiries automatically, that's a big deal for demand for your job if that's the core thing of what you normally do. On the other hand, there are lots of white-collar occupations, surgeons, finance professionals, and so on, for whom dealing with emails and administrative tasks is something that they do as an input into their job, but that is not core to to the value they're providing to a firm. And so for them, having those tasks taken over by generative AI capabilities might actually enable them to refocus more of their time on the actual value add that they provide for the company, on the strategic decisions, the client interactions, and so on. And so as a result, for them, if these supplemental tasks are being made more productive, that might actually be less negative or even positive for the demand that you can see for those jobs. And so in the short run, there's definitely a lot of heterogeneity here between different workers in terms of what kinds of tasks are being automated for them. And then in the long run, we can only speculate right now, but it's very likely that in the long run, we'll see very different productivity impacts as a result of short-run changes being oftentimes just a plug-in solution where you take an existing work process and you replace one part of that with generative AI as a tool that takes over for a part that might have been done by a worker beforehand. But in the long run, you might see companies reconfigure their work processes more generally and sort of create new tasks that complement the capability of generative AI and sort of this reconstructed system of how we do work. And so there might be lots of new jobs coming up in terms of pre-configuring tasks that generative AI can do well, doing quality control on the back end, doing a lot of the systems design for this. And so we might see very different changes in the long run than we've been seeing so far.
Andrea, would you like to add?
Sure. So I'll pick up a little bit, and Gregor, we should put our paper in the chat because I'm sure everyone is so excited to read it if they haven't already. But I want to pick up on a couple things. So just a couple details. So this is great if or you're thinking about a career change, or you're an MBA, you want to know what is in different jobs. So there's a Bureau of Labor Statistics database called ONET, where it tells you for every occupation what the tasks are in that occupation. And in particular, and even if you click on the occupation, it'll also tell you like how many people have a postgraduate degree and whatnot. But what we had done is to use ChatGPT as a research assistant to assess whether those tasks can be done by generative AI, ChatGPT, or similar models, and whether the tasks in that occupation that can be done are core or supplemental. And so that's just building on what Gregor had already said. I think at the end of what he said is what's really interesting. And I was on an AI panel at the American Finance Association, and the moderator brought up Excel. So, I'm not sure of the age distribution of our panelists, but remember when Excel came out and everyone's like, oh my gosh, wow, we don't need, people that are human calculators anymore. But guess what? Now there are people who are winning Excel competitions, and we're doing things with Excel. We're doing new tasks that we never even thought of before. So we are going to have new tasks, which I think is great. There's also this question, and I had a big debate with a good friend and co-author of mine, of whether AI tools are going to flatten wages within an occupation or lead to a superstar effect. And my prior is that this technology will be no different than prior innovations in which we will have more of a superstar effect. So it's essentially increasing the span or scope of the talent at the top of the skill distribution within any given occupation. But of course, that's yet to be seen. The last thing I want to say is in finance, we generally have an economy in which the labor share is declining. That's particularly true in manufacturing. So services is a little less sensitive, and finance is a service. And in finance, the labor share has not declined. It didn't decline with email. It didn't decline with Excel. And so there is something about it that is very personal to us. And I think maybe, we can work to understand that better, but that personal human nature, I mean, the machine will never be a human. So I think we got to keep that in mind.
Right. So maybe the trust factor in financial services is really strong.
Yeah, which is, there's a lot of research on whether the machine is more trustworthy than a human or not in making decisions that either have or do not have biases, or are correct or not correct, or, kind of because we know we make a lot of behavioral mistakes. And that's one of the things that quantitative finance, so David at BlackRock, helped to solve, is it prevented humans from making those emotional errors. At the same time, we have relationships with our financial advisors, and it's kind of part of our health, the health of our life. So I think we don't want to let that be managed by machine. And in the cases that I teach in my fintech class, when you go to, robo advisors and things like that, they have had a lot of success, in particular with millennials. But with larger accounts, it's been tough. And so that's an interesting question of why that is. Is it because of the limitations of where the models are now and where the machines are now? Or is there something fundamental about the way we think about our money that is inherently personal?
Mm-hmm. So just to go a little bit deeper on this point, kind of thinking about how it could affect certain industries differently. Gregor, if you could expand a little bit, which sectors do you believe are most vulnerable to job displacement due to AI, and which sectors maybe stand to benefit the most? Or do you think it varies more by sort of task and job function within each industry?
I think it's really the latter. I think it's that every sector and every industry will have some functions that are impacted and some functions that are less impacted. There are probably fewer tasks that are impacted in agriculture or fishing and mining than there are in sort of administrative services and generally sort of white collar industries like finance or tech. But I would say that any sector is going to have some impact. And I think that impact is going to vary more by function and level of responsibility within each of those sectors, rather than by some sectors being fully impacted and some sectors not. And so I think it's more that the kinds of lower level routine cognitive tasks are more likely to be affected, whereas sort of creative tasks that involve human interactions or some sort of strategic planning for what tasks need to be done are more likely to be complemented by this.
Mm-hmm. So we're going to kind of hone in a little bit on the finance sector in a second, but I'm curious, Emad, if you're finding any other insights based on your work across a broad set of industries in terms of sort of which ones are more vulnerable, which ones are better positioned?
So it's a really good question. And, I don't know. I think I really agreed with Andrea's point. I think there's going to be a lot of disruption and new jobs are going to be created. So it's hard for me to tell if this is a net gain or net loss. But for sure, if you think about disruption, and you think about it in two axes. So I talked about the two places where disruption is happening. One is you're making your business more effective and optimized and selling new things to your customers. If you put those on an axis, the two industries that seem to be most ripe for disruption are the tech industry itself, because all of a sudden you're able to produce software with a lot higher efficiency than you were ever able to before. And you can produce a lot more new kinds of products. So massive disruption happening in the tech industry, I would say. The second one that is probably close behind is media, because your sales and marketing costs are getting disrupted and your sales efficiencies are starting to go through the roof, because you can be a lot more targeted about which customers you're going after with the right narrative, and your marketing is a lot more effective. So those two stand out to me. Other than that, there's banking. I think banking, insurance, those are like, I run into a company every week that is redoing the underwriting process because all of that data collection used to be really hard, and then applying the rules for underwriting used to be really hard, and now they're becoming a lot more effective. So those tend to be the ones that come to my mind.
Could you actually expand just a little bit more on insurance? We actually have a question in our audience about AI and insurance in particular. Yeah,
so for example, like I just met with another company that what they're doing is they work with a bunch of, they're a broker. They work with a bunch of insurance companies, and every insurance company has its own underwriting rules on who they give insurance to with what type of rules. On the other side, they have to match customers with those insurance underwriting rules. Now what they're doing is they're looking at using LLMs to manage these rules in a way that has a common language. And as customers are coming in, they're using LLMs to match which ones are the right customers to match it with. And this used to be a very human task in the past. And obviously, as I mentioned before, like right now, this is at a stage where you still need a human in the loop to quality check, because at the end of the day, LLMs are just taking a first shot on goal that is actually pretty good, but you still need a human to interact. But the efficiency at which they can underwrite has gone up by a lot. Right.
Got it. Yeah, that's really interesting. And so, but these days, if you're following the stock market, AI is one of the most powerful buzzwords in the stock market now. How is all of this impacting the way that firms are valued? David, you work in this directly. Andrea and Gregor, I know you've done cutting edge work on this question on the research side. If Andrea and Gregor, if you could start and you can decide who'll take it, but what have you found in your research? And then David, I'm curious what you're seeing in practice.
I was going to show a picture. I love this picture so much. Is that possible?
I believe it is.
Okay, let's see if I can share my screen. Let's see. Yeah. Okay, so I'm going to show this one picture, I guess. So here is our artificial minus human portfolio returns. And you can see the drop line is when ChatGPT was released. And basically what we've done in the red line is the artificial portfolio. So those are the firms whose workforces are comprised by occupations which ChatGPT thinks that it can execute the tasks in those occupations very well. So that's the artificial portfolio. The dark dotted line or dashed line is the human portfolio. So that's where there's a lot of physical things. It's like stonemason, and actually 17% of BLS occupations have very little or no exposure because it's a lot of manual tasks that need to be done. The dark solid line then is the long short portfolio. And you see a couple of things. There's just this strong divergence, the outperformance of the artificial portfolio, which comes from the fact that whether ChatGPT or generative AI models generally, of course, the internal ones, the external ones, the next versions, et cetera, when your labor force is more exposed, either because the models can do the jobs of your laborers cheaper and better, or whether those models are complementary to your existing labor force, these firms seem to be benefiting a lot. And I think it's really interesting. This is totally separate from product market effects. You can exclude the tech industry. I think it's only 30% of the variation in labor force exposure is explained by industry, because surprising things like Tesla has a low labor force exposure. Of course, it has a high product market exposure, but a low labor force. It's mostly making cars, right? So I guess what I would say for the performance of firms, we have the product market effect. That's what most people are talking about when they talk about the Magnificent Seven or Apple, Nvidia, Netflix, Tesla, and so on. But there is this harder to discern workforce exposure that the market actually did see, and it saw it pretty quickly. And by the way, this second uptick in the solid line, which is the long for short portfolio, so long artificial stuff models can do minus stuff humans can do, that's right around the next release of the next model. And even though we can't date it because everyone was saying it's next week, it's now, because there's no event, you can see that it had a big effect too. So I'll let other people comment on the product market exposure, and Gregor may have further addition.
I think Andrea already covered most of it. I think so we found that there is a big uptick in terms of valuation right after ChatGPT was released for the firms that are more exposed. And then I think one important wrinkle in this is that this doesn't necessarily impact all companies equally, right? So that companies can have this potential to realize productivity gains from generative AI, but they actually need some sort of ability to implement this, right? I guess Emad probably knows this really well. Like, not all companies are equally capable of realizing this value right upon impact. And so one thing that we actually found is that companies that have some sort of pre-existing ability to work with data or have existing data management capabilities, they saw a much bigger uptick in value than companies that don't have that kind of capability. Because for them, in some sense, yes, these new tools exist, but if they can't put them into practice because they don't have that technical acumen, they might as well not exist.
David, please.
Yeah, sure. Well, that's a great chart and analysis, Andrea, very detailed in the approach there. I'd say at BlackRock, we're a long-term investor, so we're looking at some themes that are going to play out over time. And so we'll take a top-down and bottom-up view to that. But I'll just add another perspective as well. For my own opinion, I think that, markets are driving valuations of companies. And that's based on a generally held assumption that we have efficient with full knowledge of what's going on. And I think Gen AI unlocks a whole knowledge that we don't have had previously. Any efficient based on this opportunity to edge or just increase that knowledge scope that's out in terms of how your company get how to give you.
So, firm values in the stock market are one thing. Kind of more broadly, as we think about even broader investment portfolios, how is AI, and David and Andrea in particular, and how is AI currently being integrated into asset management? And what impact is it having on the industry overall, both from the perspective of opportunities and also risks? So David, what are you seeing from your perspective at BlackRock, where you have all the possible products one could have?
Sure. So first, I'll just state that as we're managing portfolios at BlackRock, we use AI as a tool, and we're not using it to independently make any investment decisions. So it's there to assist our portfolio managers in what they do. So having said that, I'll also just reiterate kind of where we started with this. AI is not new. So within asset management and within BlackRock for the last decade and change, companies have been using AI for managing portfolios. And so this comes into play in a few ways. Real practical use cases, including getting additional insights on our investments, data quality control, things like making operations more efficiently. And so one specific use case is around natural language processing, which ties into Gen AI. So we've done this before, but Gen AI elevates it quite a bit. So looking at things, text from places like broker reports, call transcripts from corporate earnings calls, regulatory filings, online news articles, all those are great intel of information for companies that if you get sentiment analysis or summarize it or just extract insights. So Gen AI allows you to do that in a bigger way with more scale. And then we could go to additional data sources beyond those using Gen AI. So at BlackRock, we kind of divided into the two axes that Emad mentioned plus a third. So we look at how it impacts clients, how it impacts our productivity, and then how it impacts our investment process. So that's like the third one. And so from a client standpoint, I'd say that the asset management industry, and this applies more generally as well, clients are going to expect us to be more responsive. And with Gen AI, you could have information more readily available at your fingertips. So either our internal relationship managers or the clients themselves getting direct access to that data. So that's like the client side. I touched on the investment side a bit. Asset management as an industry is all about scale. So having products and services that are more scalable, Gen AI, I mean, really helps there. And that's where the productivity side comes into things. And then internally, I'd say there's a lot of organizational changes happening across asset managers driven by Gen AI. I mean, you need new teams that are dedicated to AI. You need developers to build up their expertise so they could code AI solutions. You need governance around it. You need, even if your role is not directly tied to AI, you're most likely going to be using AI in your job. So individuals need to ramp up the learning curve there. And then ideally reallocate some of your time because you're going to have productivity benefits. And that's bringing you to a higher level of work. So it could be more engagement with your clients, being more strategic in your investments, all sorts of things.
Thank you, David. And Andrea, you have a unique perspective at the intersection of both research and practice in asset management. What is your take? How is it transforming the industry, if at all?
Well, I mean, for sure already, I think, Emad, we were on a panel before. And I think one of the things we learned is that in sales, that's such an easy, first place. It's like if you have an existing distribution channel, now all of your messages can be more tailored. I mean, one of my friends is, creating videos. When you get admitted to college, it says, "Welcome, Andrea Eisfeldt," on like the football stadium. It's just like you can be drawn in. So tailored marketing is somewhere where this is already going. I think David probably already touched on, we've been using machine learning and kind of lasso methods or whatever it is, like trying to, tame the factor zoo, all the different quant factors we could use. We use it for model selection. What I think a really interesting place will be to use it for is that even with all of the options we have, all the mutual funds, all the ETFs, all the different advisors that we can go to, you still kind of have just like a few different like styles. Either you've got the quant style, or you've got the behavioral style, or you got the thematic style, or you've got the ESG style, or maybe you also want individual stocks. I think going forward, kind of like we said, our portfolios are so personal. It really should be individually tailored. So even now, when you're getting something individually tailored, it might be tax efficient for you, for your situation, but it's still pretty much fitting into some kind of overarching model, and only one of those, kind of many models that are the brands of people who are managing money. So I think we'll get more of that. I know AI is already being used, for example, to help communicate kind of risk attribution or portfolio performance. And that is very useful too, because that can be a team of people. I think at AQR is called portfolio solutions. And just, you still want a human talking to you about your portfolio, but a lot of the kind of numbers that need to be crunched, the machine can do that. And I think Gregor touched on this kind of, you have an existing data corpus. I think that's true for the finance companies too. So I think, what we found in our research generally, one of the questions we got is, why would incumbents necessarily benefit from a new technology? There's this idea that new technology should be disruptive. So, Kodak shrank when we got digital cameras, for example, or, ebbs and flows of different IT companies. And I think the thing about generative AI and AI generally is this, incredible value of your existing data. And that's something that the larger asset managers have. So there's that aspect too.
Yeah. And so what about sort of the data security and privacy issues? I mean, I imagine, at BlackRock, you're not putting your own proprietary data into ChatGPT. For others to then, learn and the models to train from. So how do you think about the main challenges with data security and privacy and how they can be addressed?
For sure. So yeah, information security is definitely one of the main risks with these new large language models. And diving into that a bit more, you worry about your information leaking out, to your point, Lori. There's an example early on last year with Samsung and their coders putting some of their proprietary code into ChatGPT, and then it got leaked out as a result. So you got to worry about that. You don't want to have your use of a model be used to train the model, and that's a form of leakage. And so this notion has come up with what we call the walled garden, where you want to protect your use of a model and make sure that any information you put in doesn't leave the walls of your organization. And so the walled gardens have been really the solution here from an information security perspective to get corporations comfortable with using large language models. It's quite costly to create your own model, and so most organizations are not creating their own models and they're using a third-party one. And so you got to worry about this. You have to have the right controls in place to make sure you're evaluating these models, potentially vendors who are using these models. So having a control board in place, having the right governance there, your specialist in legal and compliance and information security, asking the right questions, doing the due diligence on the models, on the vendors, is really important, and being selective of it's hard because some of these vendors are brand new, just came up in the last year, really. So how do you feel comfortable with such a new company? So there's a lot to it there. I'll say that another major risk that we've all probably experienced from using ChatGPT is hallucination. And so you got to worry about hallucination as well. And there's settings you could do, such as the temperature, to kind of turn it down, but it's going to be there. And so one of the things that Emad mentioned earlier that we do at BlackRock is human in the loop. And so human in the loop is really important. And that just means you're not using anything coming out of a model to have it go straight to be part of the product or making a decision for you. You have a human there reviewing the results, checking it. If you do it right, the model is able to point you to the source it used for its information. And then you could go to that independent source and validate it. And just like with Google, you can't believe everything you find on the internet, right? You can't believe everything you get from a large language model. So that's a big one as well.
So, we're sorry, this was someone. Sorry, okay. We are a business school. We're in the business of education and training leaders. So especially kind of within the finance sector first, and then we'll talk more broadly later. But even for our alumni who are finance professionals across a lot of different sort of verticals within finance, what are the changes in the skill sets of finance professionals that are necessary to effectively leverage AI? I mean, Andrea, you mentioned the Excel competitions. I think I remember that panel. I think he said that a 14-year-old won, right? So there's a big arms race in terms of the needed skills and tools. What should finance professionals be focused on in terms of what to learn best to effectively leverage AI? Where should they tool up? Anyone?
I think that's such a good question. So I was just, because I'm working with BLS data, I was just looking at, salaries of different occupations, and still for a college grad, computer science is kind of an outlier on the upside. And I thought, what is going to happen there? Is that going to be commoditized? So I wouldn't give the advice to people that you should, you need to go out and learn how to code, but 100%, it was my first job. So my first job, I graduated college in 1994. I went somewhere, I won't say who this person was or what their background was, but they were holding the mouse like this and saying like, it's not working. And I was like, whoa, that's not good. This person clearly came from another era. So you definitely don't want to get behind. Like, start using these tools now, use them as much as you can so you're comfortable with them. Don't be afraid to have ChatGPT write you a poem at night or tell you how to meditate, or ask them things about your business, or use Copilot when you're coding and all of these things. So I would say do experiment, do play around, do take advantage of things like this panel, any kind of educational courses that use these tools. Get your hands dirty, get your feet wet.
Well, let's actually. Oh, sorry. Go ahead, David, please.
Oh, yeah. No, I think it's actually an amazing opportunity to be part of something that, at least I believe, is going to be the future. So if you believe it's going to be the future, what better opportunity than to get in at the start? Because if you not even the mouse example, but like if you start kind of diving in 5 years from now, it's going to be that much harder to catch up. But if you start diving in now from the beginning, you can learn the concepts while they're still easily understandable, per se. That's kind of a generic thing, but so read a lot, like just adding to what Andrea said, but yeah, get your hands dirty. There's so much material out there. YouTube videos are your friends. Watch lots of YouTube videos. They'll inspire you to go do it yourself. It's becoming democratized, so you can do this stuff yourself. Even writing code, you could ask the chatbot to write the code for you. And then if you run it, you'll start to learn how it works, how to connect the pieces, learn how RAG works. That's an important thing. Build your own stuff here. Even if you're not tech savvy, it's worth investing in. And whatever role you wind up in, if you know this, it's going to be part of it in some way. And you're going to be more successful than your peers if you really dive into this space. Network with your peers, learn other perspectives, form your own opinion, and follow the major players in this space, the companies, the models, and the people. It's changing quickly, and it's going to look totally different a year from now. But if you know the history behind it, you're also going to be in a better position.
Mm-hmm. That's great advice. Emad, I'm curious, specific to, say, MBA students, not just within finance, but MBA students more broadly, how should MBA students be thinking about positioning themselves to succeed given the growth of AI?
It's funny you ask this question, because I was just with one of the investment bankers who also did business school, and we were talking about like how we had to learn Excel. Like, will kids out of a business school have to learn Python to begin with? And we weren't sure. But I will give you one example that related to the point David was making. So about 4 months ago, I decided to take one of the old projects I had worked on it was a computer programming project I had worked on a while back, and I wanted to redo that whole program in a different language. And I was like, I'll use ChatGPT and see like how much more effective I can be. So to give you an idea, when I first wrote that code, it took me about 2.5 weeks to get that whole code done. And this time around, I was like, all right, I'm going to redo the whole thing in Python, and I'm going to just have ChatGPT. I'm just going to tell ChatGPT what this program does step by step and have it spit out code in Python and just try to run it. And I kid you not, in 2 hours, the thing that took me like 2.5 weeks to do, I was done in 2 hours, and it did the exact thing with a couple of new things. So I was just blown away by that, and it made me realize like how it might not even matter what language you know, but like this programmatic thinking that Excel already gets us to think about is going to get to this next stage where, as long as you can think in that like programmatic way, you can think about for loops, you can think about if then else statements, then you can do a lot that we can do today. And you might not need to actually know a language, but maybe Python will become the dominant one.
If I can add something to that, I think I think that's a great point that Emad was making. I think is that in some sense, I think what MBA students should take away from this is that rather than saying, oh, there's no point anymore to like learning anything about computers because it's all been done now by generative AI, to me, it's actually the opposite. Is that suddenly like you can, with some, as Emad was saying, with some basic knowledge of how programming works, rather than spending years acquiring knowledge about the right syntax and how each actual package is deployed, generative AI can fill in all those blanks for you in terms of the like details of implementation, as long as you have some high level idea of how of where you're trying to go. And so suddenly you can be much more ambitious. You can do coding projects where previously you would have thought this would take you weeks, and you can actually implement them in a couple of hours in an afternoon. And so in some sense, like it should open up the realm of possibilities, and people and MBA students should just think about pushing themselves to try to do things that you previously would have thought impossible, and just see how far you can get in some ways. Because I think in some ways what these tools enable you to do is they replace factual encyclopedic knowledge of stuff with a greater reward to just being an agent in the world in some sense and trying to come up with ideas that then are being implemented. The implementation part is suddenly becoming cheaper, and so that should make it easier for people who come up with ideas and who can sort of manage tasks and structure processes to actually achieve outputs without requiring someone else to do the implementation for them.
Yeah. So this is great advice for our MBA students, and really all students of this current generation. We also have in our audience a lot of professionals thinking about their children's future and their grandchildren's future. So how would you kind of advise, what are the skill sets required for the future workforce? Sort of where would you advise your kids to kind of invest their expertise? Thinking ahead.
I can go first.
Yeah, go ahead.
I'm happy. So I think I just want to build on, we were already chatting about, like, should it be computer science or not? And I think computer science is probably going to be an outlier, but I worry about it a little bit because, as I mentioned, the need to know a specific language is gone. You kind of need to just have that higher, the thinking around how you think programmatically. But some things don't change. Like physics doesn't change, math doesn't change, biology doesn't change. So my recommendation would be, if you're going to do your undergrad degree or you're like learning some new stuff, I would probably start there and then build on like what becomes more interesting beyond that. But I definitely feel like the foundations of all of this will still be the same, which is the math and the physics and biology and the chemistry still exist.
So one thing, I'm going back and forth on this. One subject that I thought could become more interesting is philosophy, because it's about like, thinking about how to think. But then I saw this humorous graph that said it was like perceived brilliance, actual brilliance, and the philosophers are the like outliers on the perceived relative to the actual brilliance. That didn't make me that excited, but I actually worked with that. I was chief economist at a hedge fund where the founder was a philosophy professor. So that was an example of actual and perceived. I mean, perceived very high, but actual very high. So I'm kind of strong on philosophy. I agree about studying mathematics, which is, of course, the basis of all applied math like physics and finance and so on. The other interesting thing is I'm going to be on a panel. I don't know if anyone in the audience is going to be there too, for CFA LA on Thursday night. And one of the other panelists is a linguist, essentially. So I think that's also kind of a cool thing to think about, because it is about like humans interacting with other humans. And now if these machines are becoming more like humans, it can be about efficiently and maybe preventing hallucination and such by having very precise, grammar essentially in the way you interact with the machine.
Yeah, the thing that comes. Yep, go ahead.
Okay. Yeah. I mean, I have an 8-year-old at home, and he's just starting to learn the language just from hearing me talk about work. So, but I think knowledge and true deep understanding kind of trumps everything. And so less about an area to focus, but more broad focus of things like ChatGPT allow you to have a personalized tutor where you could ask it questions and go deep. So use it as a kid to learn, to augment your schooling and to really explore all sorts of industries, all sorts of areas, knowledge areas, as much as possible.
Yeah, the thing that comes to mind for me is that I saw a recent study on creativity and brainstorming new ideas using generative AI that basically found that it helps sort of the average group come up with more ideas, but the overall spread of how creative those ideas are goes down. Because in some sense, these tools are built to come up with the most likely response to something, and most likely is rarely the most innovative response to something. And so I think in some ways, what we should encourage in children is to be able to create those innovative responses, right? Foster curiosity, creativity, and sort of an ability to recognize good ideas when they come their way. And that might require for kids to do more unusual things, expose themselves to a variety of different life situations, travel more, encounter more and different human beings in some ways, and less rote memorization and more sort of experiencing the world. And to me, that sounds like a very positive vision of where education could go.
Right.
Yeah, it sounds like the exact opposite direction of the direction of grooming for billables that it has gone.
So if we keep our focus on the future just a little bit longer, and specifically within finance and business, sort of where do you see the greatest potential for AI to impact finance, especially in the next 5 to 10 years? This also came from the audience. Is it more in generating alpha, or is this really about improving operational efficiency? I mean, so, when you think about the strategy of any firm, we often think that just being efficient or even being more efficient isn't enough. Eventually people catch up to that. So you really need a point of distinction beyond that. Is that where this will head? Sort of helping to improve efficiency kind of industry wide, and then it's going to be even harder to distinguish yourself? Or how do you think about where the opportunities will be kind of looking ahead?
So one thing I'll just call out is, language models are trained on something, and there's going to be a shift, I think, in the future away from a focus on the creators of the technology and more to the large scale data owners. So the more original content you own that's maybe proprietary to your space, I think the more you'll be able to be empowered by the use of language models. So whether that's alpha generation or efficiency, it's hard to tell in the future where you're going to go, but data ownership's a big one.
I guess, I'll chime in. I think, alpha is very challenging to find everywhere. It's always an arms race. We have already high frequency trading that is kind of using machines and to do predictions of trying to, see what's going on with order flow and then trade against it. I think though that, we have through fintech, it's not so much AI had innovations and more, less homogenized, more complex asset classes. And, maybe we'll get more of that. And I think, the more we can reduce the costs of investing in things that are more complex or even make them more simple, the more we lower the costs of financing things that, might be innovative and hard to get off the ground otherwise. So there could be this fortuitous sort of innovation loop in that sense.
So last question for everyone. What is the most important question related to AI that remains unanswered as of today? Where are the kind of striking open questions?
I think that the horse race between misinformation and information is still an unknown factor. I also think this, superstar effect versus flattening is an unknown answer.
I think it's that. So for me, the big question is whether or not the hallucinations that David mentioned earlier and some of the unreliability that comes out of the current generation of large language models is something that is intrinsic to this technology, which would mean that it would remain limited to use cases where humans can sort of do a curation and quality control afterwards, or if we will figure out a way to have layers on top of these models that make them 100% reliable, which is the sort of, or at least 99.999% reliable, which would be the required accuracy for a lot of business use cases where you don't have a lot of error tolerance. And so I think the degree to which these will be world changing is a question of that accuracy and getting that last bit of unreliability out of these models to some degree. And I don't think we know the answer yet to what degree that is achievable.
There's all sorts of things from regulation to the speed and quality and how scalable is it? Does it become more expensive to produce each one versus do small language models win out in the end? But I'll just add one that I think is pretty fun to just think about, which is usually transformation doesn't happen from just a single innovation or innovative technology like generative AI. Transformation, if you look at the iPhone, was transformative from pulling together lots of innovations. That's kind of the common example. So thinking forward on generative AI, what other innovations would we combine together to form something that maybe we're not even thinking about? So robotics is an obvious one, combining robotics with generative AI, but what about other things that are out there like 3D printing or blockchain or the Internet of Things? I mean, if you start combining these together, I'm almost positive that we'll have something that we can't even think of today, and that's pretty exciting.
Yeah, I think for me, I would just add to that. So there's a couple of debates going on right now that are almost existential to which direction we end up in, which is open source models or closed source models. The other debate is around, are we going to be training one single model to rule them all, or will we have like many small language models? So this like concept of small language models coming up. But the one that I'm most excited about and also maybe somewhat scared about is the concept of AGI, which is artificial general intelligence. And it's not just artificial general intelligence, but giving it the controls to do stuff. Right now, we're still using most of these LLMs to just retrieve information and make decisions. But what if you give the control over to the large language model and the AGI version of large language models? What that does is really hard to tell today, but I think it'll be pretty interesting to see what that evolution looks like.
Well, we are at time. On that note, I want to thank you for this fascinating discussion, to all of our panelists, and thank you everyone in the audience for joining us. Stay tuned for our next Fink Faculty Forum in May. We'll be out with an announcement soon. So have a wonderful day, and we'll see you next time.